Okay, welcome back, guys. I'm going to go ahead and get right into the stock market technical analysis. We'll do an early morning market analysis. So what I'm going to do is cover the tech stocks. We'll go through some individual trade ideas, and then we'll go ahead and wrap up. So starting right today, we're looking at the NASDAQ futures. Little resistance right in here, about 15,250 or so. But it's popped that as of right now. So really what I think we're doing is heading up to this downtrend line. You can see this is kind of the downtrend. 1, 2, there's a third reaction, kind of a fourth, and I think that's exactly where we're going for probably today or maybe tomorrow. And that's your near-term resistance, is that downtrend line. And you know, if we get, I would expect we probably will get rejected there. And at least have a minor 1 or 2 day pullback at that level. And then we'll watch that. A breakout of this downtrend line would be bullish. And if we do that, I think it's pretty likely or very probable that this thing actually might want to run up and put in a new high, a new kind of high right up in here. If it does that, it's going to be a divergent high because you can see the negative divergence that's in place here. Momentum's been trading lower, but if it wants to just run straight up and put in a new high, it'll be a new divergent high. The headlines will be all bullish. Everybody will be extremely bullish. I'll be looking to short that market and short that new divergent high because that will have a high probability of correcting or pulling back from that level. So bullish on a breakout of the downtrend line. Otherwise, likely get a 1 or 2 day pullback there. It is resistance, so that's what I'd expect. If I look at triple Qs, here's the trend line that lines up there. You got resistance, resistance, resistance. So I think we're going to head up there. Maybe a pullback here, maybe not, but head up to there. A breakout of that downtrend line, and you're probably set up to run up. And you can see there's a potential trend line right here. This is the bull trend that was in place since the January of 2022 lows. Or really January of 2023, sorry. Support, all right? Support right in there. There's support, and that trend line was broke. So if they break that downtrend line, you could run up and do a back test of that trend line, putting in a new divergent high. All right, it's going to pop up, back test from underneath. That's resistance. It'll be a divergent high because we'll make a new high with clean and clear negative divergence. Very objective for a short position or entry if you do a back test of that trend line. All right, first things first though, we need to see how this thing reacts as it approaches this downtrend line because that's near-term resistance. Right now it's sitting at about 369.80ish right in there, and then of course it depends on when you get there, but if this wants to just keep going up, it's gonna hit that downtrend line pretty soon, and then that will be near-term resistance. A break of that, obviously that sets us up for that back test scenario. The S&P 500, the SPY, this goes back to the October of 2022. As you can see, support. We broke it here. We didn't really have a reaction. We broke it and kind of chopped around and just really has sliced right through it. So it's not my favorite trend line because I only have 2 data points, 1, 2, and then not really a very clean reaction to make that third data point. But as of now, let's just say it is the trend line and we've recovered that. So that's bullish in the short term. That probably sets the SPY up. There's likely this downtrend line, something like right about there. And that sets the SPY up for a potential move up to that downtrend line as near-term resistance. A breakout of that, and then you're probably likely looking at a new high and a new divergent high. All right, negative divergence exists here on the SPY as well. So if it was to run up and make a new high above that former high right there, it would be a divergent high, and it's very likely going to be a very objective sell signal. If you want to trade it long, I mean, again, this is near-term resistance right here. You break above that. It looks like it's heading up to that right now, so that's obviously a long trade there. And then you break above that, and you're probably going to do that all-time new high. So you could trade that long just as it approaches that new, if it makes a new high there and it's a divergent high, that's where I'd look to probably start to pull my longs off and look for the next short opportunity. And we'll roll through some of these FANG stocks because, again, they're the kind of the market leaders. They're the big trillion-dollar companies that have the power and potential to really move the market. Amazon, we're coming off a divergent high right here. So you can see this is negative divergence, that's negative divergence. We've got to pull back. Maybe it's going to run up and do a back test. Resistance to me looks like it's right about there at 135.70-ish level. So this thing might want to run up and hit that. We're just coming off that divergent high on the daily chart. So I think there's more downside whether we bounce up to that resistance level and then head lower. Maybe something like that. And then down to this major trend line, which I have 2 data points. So I can't fully confirm it, but 1, 2. And that would be 3 right there if we get a reaction off that. So I don't see much in Amazon. And the bigger picture, if I go to the weekly chart on Amazon, I just have to constantly point this out to viewers. You can see this is going back to 1997. So support, 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 rolling in, breakdown, back test, and it's a bear market. The bear market really started back the week of April of 2022. The April 18th of 2022 is really where it started, and we back test, and we're making lower lows. It's a slow roll. This is not. I'm not looking for a crash. You don't get the crashes in bear markets typically until it's obvious to all, and that's usually signaling kind of the end of the bear market. So, typically, just like bull markets rise they rise the wall of worry, bear markets fall the slope of hope. And what that means is you drop and then you rally. You drop and then you rally. And you just kind of incrementally make your way lower until finally everybody capitulates, and then you get kind of that washout selling. So again, day in and day out, when I'm pointing out kind of key areas of resistance, I'm talking about that slope of hope. I'm looking for rallies into resistance to be sold into to make the next lower low. And then that capitulatory selling will come near the end of the bear market. That's Amazon. Google looks like one of the better charts to me for a short. On the daily chart, you've got this bearish rising wedge. You've got negative divergence there. And you have a breakdown on a sell signal. That's a sell signal right there. You're back testing. And again, back testing the trend line from below. It can go a little higher, and it can continue to back test for a couple days, which maybe that's what it wants to do. It wants to rally up, hit the trend line, pull back a little, hit the trend line. That's what it's doing, but that's an objective area to short at. It is a new divergent high as well, so it's very objective for a short right here. One way to play it, and this is kind of how I'm looking to play it, is one, you can take the short on the back test, give it a little room, because again, it can continue to back test a little bit, but you can take maybe a starter short, and then you also have this secondary trend line right here. If I go down to the hourly chart, you can see there's the secondary trend line. And you could add your short on a break of that trend line. So again, objective to short on a back test and an objective to short on a break of support. So maybe a partial position, add to it on a break. And that's kind of the trade that I prefer. So that's my strategy. Okay, took a quick break. Apple. So on Apple, you've basically got resistance right here. There's a gap also right in here, a little gap to fill. So resistance looks to be about 181.43, 181.50. Right in that area is the next level of resistance. And again, I think if Apple runs up and hits that, the triple Qs is going to continue up towards that downtrend line that I pointed out earlier. So that's your next level of resistance. Now, Apple, one thing about Apple, it is coming off a there's bullish divergence right now on the daily chart. That's bullish divergence there. So you made a new lower low in price, but momentum was moving higher. So that's bullish. That's definitely a bullish development that can't be denied. And that might be enough. Typically, you see these bullish divergences, and that's usually enough to make a run at the new highs. So if that happens, then obviously then the triple Qs is going to be making new highs as well. So we'll keep an eye on that. Next level of resistance is, still that 181.50 though. Meta. So Meta is basically just about there to make a new divergent high. There's the highs right in there. A little bit more upside. Call it, it's really just another, percent or so upside, and that will be a divergent high. You can see the negative divergence. This thing has pretty big negative divergence. It's been building for a while, so I would think it's very likely that it's going to make that divergent high, pop over those recent highs right there at about 325.70, make just a slightly new high, and then get sold into. Okay, so what we'll watch for on that one, if you're interested in a trade there, again, I think it's going to make those highs, so we're going to pop, and then you're going to want to narrow it down to the hourly chart and look for some sort of a break of this most recent uptrend line, something like that. So pop up, make those new highs, and then ultimately break this little trend line here on the hourly, and then that should set the selling up on this one to start to make the next leg lower. So that's what I see on Meta. Microsoft held support. Microsoft also has that bullish divergence. You'll see here, there's the momentum. Bullish divergence there on the PPO. Not so much on the RSI, just really on the PPO. It did make a new divergent low, though. There's your divergent low. All right, that's bullish divergence, and we're getting a rally. Microsoft, I've got this longer-term trend line right here. It's kind of marked in the bold red. You see there was lots of reactions on that. They kind of chopped through it a little bit, though. Still did get rejected there, so we'll say that's a valid trend line. So that might want to do another back test of that trend line. The charts aren't super clear on Microsoft, so we'll watch some of these other ones. And Nvidia, so Nvidia is just, it's really support right now, from what I can tell, is about this 403.80. It's kind of a reaction low there. We had reaction there, reaction there, reaction there. Didn't quite get it. The buyer stepped in early as it approached that support level recently, and they've been rallying it ever since. So you really got to take that out to, for the next move lower, and we're still holding that. I just don't see anything right now in this chart that tells me to short it. It is building negative divergence. There's the divergence right there. So you can see divergent high, divergent high. So maybe it wants to put in another divergent high, maybe not. I can't tell. In general, I'd be looking, in general, I think that there's probably downside coming in this one soon, but there's no sell signal. So I prefer to just hold off on any real positions on this one. Wait for the charts to become a little more clear, give us some sort of a sell signal or buy signal or whatever before taking a position. So neutral on that one for now. Tesla on the daily chart here, you can see we've got, this is former support right there. We broke it, but then that trend line got, just kind of got really choppy. Broke it, recovered it. It's just not the cleanest trend line. The one thing I like, the best trend line I like, is this downtrend line right here. You can see this is coming off of the all-time highs in this one. You've got several reactions where we hit that trend line and it's rejected. There's another as I zoom in, and it's just overhead. It's not even too far overhead. That's just sitting there at about 283.50. So run up into that. That's major resistance. That's an objective short right there if it does that. But that is, from where we're at now, that's about 5% or so to the upside before we hit that trend line. So that is, that's the objective trade. As where we're at right now, I don't see anything. Okay, so that's the big FANG stocks. We'll look at commodities. The one that I'm really interested in is wheat. Again, it's not really, we're still kind of grinding around. We just can't seem to catch a bid. But you can see this is the big bullish falling wedge pattern we've been trading off of. Breakout, back test of support. There's a back test there. There's a back test there. If you go we're still in the range going back almost a month. We've basically been trading in a sideways range. We did have that one brief dip down to hit the support, but then it popped off of that. It's still holding kind of this sideways range for the last month. So we really, to get going, we really need to take out, I believe, about $6. Should set this thing up for upside, momentum. Until then, we're just kind of chopping around, with a slight lean to, we're still kind of grinding lower while back testing from below. Big bullish divergence on this one tells me that we will likely break out and go up, but we need to see this thing catch a bid. Financials, and really with this one, we're just looking at JP Morgan. So financials, same thing, bullish divergence there on the daily chart. You can see JP Morgan momentum was moving higher on the RSI and the PPO right there, while price dipped down and made a slightly lower low, but that was bullish divergence. It was a divergent low and they're buying it up, rallying. Hit the 200-day, undercut this resistance level or this support level about 142.68 just to recover that. So that's bullish in the short term for sure. There's nothing I can, say that is bearish. That's bullish, and that could set this up for, a continued rally. So as such, some of these financial stocks like MasterCard, big bearish pattern, big bearish rising wedge pattern here, negative divergence, and we have a sell signal, but it's back testing, and they could rally it up and back test this trend line. In general, the charts, at least JP Morgan has that bullish setup, so that might carry this thing up for a back test as well. So, whether we're at resistance right now, if we break above this resistance, it's about 402. If we break above, we're probably going to go back test that wedge. Otherwise, we get rejected right here and head down to the 200. Natural gas, this is UNG. It's a natural gas ETF that tracks the futures. We have, resistance is about 779 with one reaction high up here at about $8. It's about 809. So we'll say 809 is probably the resistance level. We're also sitting right here at the 200-day moving average, the 200 SMA, pretty much right where we're at. We're slightly above it, but in general, right where we're at. So we can power through this, and we're likely heading up to this 809. Probably get a pullback up there. I think you pull back down to the 200, and then maybe the buyers will step in and we'll start to break out. This is looking pretty bullish in general. Big bullish divergence. See the momentum just moving higher. So your bullish divergence, that's a divergent low, that's a divergent low. That was your last divergent low. And then everything else has actually been moving higher while creating this pretty big basing pattern. All right, that's accumulation. That's an accumulation pattern. So, if the momentum can really start to catch hold, this thing could really become a runner. So that's what I've got on that. I think you probably head up to 809, maybe a small pullback to the 200. Then I'm looking probably at this continuing to break out. Interest rates, TNX, this is the 10-year, gapping down today and getting, kind of coming in a little bit. So the market, as rates start to come in, that should help the markets kind of at least prop them up. And again, you're seeing a rally in the markets today now that interest rates are coming down a little. So, interest rates, you've got this trend line. This is your major trend line coming off of COVID. Support. You got some support through here. And so, pull back down to the trend line could make sense. Again, until that support breaks, that is our support level, and interest rates are rising. So, that's as interest rates continue to rise, or if they continue to rise, it should continue to put pressure on the stock market. But in the short term, it looks like rates might come in a little and the market could rally a little bit. Here's a long trade setup. Not actionable yet, but definitely a setup. Disney. So Disney, you've got bullish divergence here on the daily chart, on the momentum indicators. Slight bullish divergence right there. You have what looks to be a bullish falling wedge pattern. And also, if I roll out, this is your COVID lows right here at about 79.38. Recently just pretty much hit that right there as a major level of support. So we have a bullish wedge pattern, we have horizontal support, and we have bullish divergence. Breakout of this wedge would likely signal more upside in Disney, and you take the widest part of the wedge, which is about there. Point of the breakout, Disney could be a runner, and I've got Disney potentially running up to this resistance level right about there, which is about 103. So again, no, it's not actionable yet. We need a buy signal. We need a break of this wedge or this resistance line. But if we get that, that sets Disney up for a move up to that 103 area for the projected target. So that's a long trade setup. Okay, scanning around. That's really all I have today. So in general, we you know, in the short term, looks like we're rallying a little bit. We might run up and make a new divergent high, but until we take out some of those resistance levels, we don't know that. So the overhead resistance, if I go back to the triple Qs, is the next level, and we're just kind of marching up there today. So that's our next level. Our next objective area to short is right there at that resistance. And until we take that out, we don't know if we're going to make new all-time highs. If we take it out, I think it's very likely we make some new highs and put in those new divergent highs. That will likely signal a pretty lasting top. But that's it. That's all I've got. So I'm going to wrap it up, guys. Check out my stock market technical analysis course, link in the description below. Feel free to join in the private member group. I'm commenting there a lot, you know, on a daily basis for the most part, and I'm not putting out as many public videos. So if you're interested in learning, you know, and getting additional trade ideas, market insights, what I'm seeing in the markets, private member group, link in the description below on that one. Catch you guys on the next one.